and welcome to the show. It is April 2nd, 2022, and it is not April Fool's Day. So, today we'll be talking about stock symbols MMTLP and MMAT, as well as stock symbols CEI and GME. That stands for Metamaterials Torchlight Preferred Shares, Camber Energy, and Gamestop. So, I'm going to start this video a little bit differently. In a previous video, I talked about my rules, and these are rules that I've developed over time for myself. I try to keep them because it maintains my sanity. And I went over in a previous video about 6 rules, rules 1 through 5 and rule number 8. I'll briefly go over them. Rule 1 is never invest more than you can afford to lose. Should be obvious there. Rule 2 is know your investment, or better yet, know why you're investing in a particular venture, right? Rule 3, know your risks and what happens if you're wrong. Rule 4 is understand the upside and downside potentials, what reasonable targets are and reasonable time frames, right? What are your expected earnings? What are your expected price targets? That kind of thing. Rule 5 is every buyer has a seller, and conversely, every seller has a buyer. Understand who's on the other side of your trade and why they did the opposite, okay? It's very good to know that. And rule number 8 is listen to the media, because they'll usually tell you what not to do. Okay. With that said, we're going to go over 3 rules today. Rules 6, 7, and 9. And the rest of the rules will be for a later video. So let's start. Rule 6 is don't FOMO or panic, but recognize FOMO and blood in the streets. For those who don't know, FOMO means fear of missing out. And panic is basically just panic selling, right? You're selling to avoid any further loss because you can't take it anymore. Both of these are what I like to call herd or lemming behavior. They will inevitably lead to losses, okay? Inevitably. So I'm going to break up Rule 6 into 2 parts. The first part is Rule 6A, which says don't FOMO or panic. Now, this is actually, although it sounds easy, this is actually hard to do because we're all human beings. And human beings are emotional creatures. We have to be because we evolved that way, right? We evolved that way as a survival tactic because it's a way to avoid being eaten by animals. Okay, it's a way to avoid dangerous things like, you see fire and you run away from fire. Okay, that kind of thing. So it's good. Emotions are good. They are a very quick decision-making process, and they work with minimal information. You don't have all of the information at any time to make any decision anyway. And they're good most of the time, and that's why people survive, right? A lot of times they basically trigger 3 types of responses, right? They're basically fight, flight, or freeze, okay? Freeze is a third response that a lot of people don't even think about, but it is a possible third response. FOMO, if you think about it, is really a panic reaction. You're panic buying, right? You're buying before you miss the opportunity that stands before you because it may go away. You're in a panic state when you FOMO. Both of these, FOMO and panic, are what I like to call stress responses. And as scientists, we as a species have studied stress responses. We've studied people under stress and seen what their stress responses are. Okay, basically, it affects the brain dramatically, and it affects our decision-making skills. Because when you're in a panic state, when you're in a stressed state or hyper-stressed state, your cerebral cortex or your frontal lobe, basically, it shuts down. What does this mean? This means you lose rational thought. You also lose fine motor control, right? If you think about it. When that part of your brain shuts down, another part is triggered, and that is the medulla oblongata, or the brainstem. Okay, it's the reptilian part of your brain, and it's basically the involuntary responses are triggered, right? You don't really have control. This is why you'll often see deer in the headlights. This is why people will freeze and they don't know what to do because their medulla is taken over, right? It's an involuntary response. They don't know what to do. They may know what to do even, but they can't move because they're frozen. This is also why, if you think about it, this is why panic buttons are usually large red buttons. They're large because we don't have fine motor controls at that point. When you're in a panic and highly stressed state, you can only have gross motor control functions. You don't have fine motor control anymore because your frontal lobe has stopped functioning. You have to hit a big button. You can't hit a small button. You can't hit a small fine button to actually stop things in a stress situation. Now, we've seen that the military often has images of sergeants yelling at recruits and all that. They're yelling at the new recruits, but and it's a trope, right? Everyone's seen it. But the question is, why are they doing this? Okay, they're doing this for a reason. When the sergeant is actually yelling at a new recruit, he is triggering a stress response, or he's trying to trigger a stress response. He wants that recruit to be very stressed out, such that their frontal lobe is starting to shut down. Okay, and he's trying to train that recruit to actually have some rational thought under intense stress. Maybe if he can have rational thought when he's under intense stress, he can make a decision that could either save his life or save the life of his fellow soldiers. Okay, that's why. So there's a reason behind sergeants yelling at recruits all the time, and it has to do with the brain. Has to do with the brain. So the other part of Rule 6 is to recognize FOMO and blood in the streets. Okay, we now know what panic does to ourselves, and the goal is not to be a hermit. The goal is not to isolate emotions from yourself. You won't be able to because you're a human being. Know yourself, okay, but also know what's going on in the world around you. Don't be a hermit. Don't isolate yourself from everything around you to be unaware of panic. Know if people are panicking around you, okay? Don't ignore everything that's happening around you. Understand what's happening around you. So when people lose all hope, they tend to panic, and they will panic sell. This is typically what happens because they've lost rational thought. Understand when people lose rational thought. It's vital. This is actually what short hedge funds are trying, and stock manipulators want to do, right? They're counting on people to lose rational thought. They're counting on people to panic. They're counting on this frontal lobe to stop functioning. They're counting on reasoning and logical skills to leave the human body. Okay? They want to trigger an emotional reaction. They want to shut down rational thought or logical thought. They just want you to panic sell. That's because that's what they know you can do, right? So, that brings up Rule 7. Okay? So, Rule 6, don't FOMO. Don't panic, don't FOMO. But recognize when there's FOMO and blood in the streets, okay? Rule 7 is understand what to do when there's blood in the streets, right? Rule 7, consider buying when there's blood in the streets, right? Even if it's your own. That's the other half of it, right? As I said, humans have a tendency for herd behavior, panic behavior, right? But if you can recognize when all rational thought has left the room, there's bargains out there. There's huge bargains, right? If a stock is down 90% because people have panic sold, and there's really no reason for it to be down that much, when it recovers even back to where it was before, you can make huge gains, right? Here's an example, okay? Let's just say you've got a fictional stock that costs $1 per share, and you only have $1, let's say, right? So you buy the one share. You spend $1, you buy the one share. Let's say that the price of that stock drops by 90%. It's now worth 10 cents, okay? So your dollar, the $1 that you spent is now worth 10 cents because that one share is worth 10 cents, right? Suppose during that time, instead of panic selling, suppose you bought 10 cents worth of stock, just a little bit more, right? You didn't spend $1. You had a little bit of money. You spent 10 cents. So you buy a share because the stock price is down. So you spend 10 cents and you get another share. So now you have 2 shares and you've spent $1.10. Okay. What happens if that price recovers back to $1? Okay. Well, if you sell all your shares at $1, you'll have made $2. Okay. That's $2. And you'll have only spent $1.10. That means you'll have a gain. I mean, you'll have a profit of about 90 cents, right? Because $2 minus $1.10 is 90 cents. Now, if you take the total amount of money that you've gotten when you sell your stock, which is $2, and you divide that by how much you spent, which is $1.10, you'll find that, you've got a gain of about 1.82 times what you spent. Okay. In essence, your percentage gain, over your percentage profit, your percentage gain is now 82%. That's pretty good. You made 82% just from the price recovering to where it was because you bought a little bit more. Okay, pretty damn good. Now there's a risk to this, of course, right? It could go to zero, but if you think about it, you only spent a tenth. Right? You spent a tenth of what you initially spent, when the price went down. So if there's a risk that things can go to zero, that's why you have to follow rules 1 through 3, right? Never invest more than you can afford to lose. Know your investments, or better yet, know why you're investing in something, right? And then know your risks and know what happens if you're wrong, right? So in this case, suppose you're wrong, right? And you spent $1, you could have lost $1, you could have gotten 100% loss, right? But then you spend a little bit more, $1.10. You're risking a little bit more, and now you've suddenly, after the price recovers just back to where it was from when you started, you're now up 82%. So understand your risks, understand what can go wrong, understand why. Okay. So that's rule number 7. Consider buying when there's blood in the streets, even if it's your own. Rule number 9 is something most people don't think about, right? There's actually 3 directions that a price can go: up, down, and sideways. Most people forget about the sideways. Okay. And the reason is that, a stock can stay sideways for a long time. So this is why most options actually expire worthless, because the price goes sideways, right? I mean, that's why call writers make a ton of money, because, the price goes sideways and the calls expire worthless. So there's an old saying that, about sideways, the market can stay irrational longer than you can remain solvent. It can go the other direction than what you predict for a longer time than you can remain solvent. So anyway, know what the directions are and have a plan for all 3 directions, right? Just understand that. Rule number 9. I am not going to go over rules 10, 11, and 12. That is for a future video. But now we've gone over a lot of the rules. You should understand most of them. By the time that the next video comes out, you'll know everything that I think could be needed to be known. Who knows? You'll know most of the rules. Okay. So with that said, let's take a look at the stock symbol MMTLP now that you understand a little bit more about the rules. Or my rules, at least, okay? So, March 31, 2020, we saw the stock price of MMTLP drop significantly. Was it a panic reaction? We had large volumes during that time. We had a larger drop in price. Looks like a panic reaction to me, It could be a short hedge fund pre-planned or, induced panic reaction, right? If they had a whole bunch of stock that they were planning to sell anyway at that particular date, they could have. They could have been saving it up for that particular time. The other question is it over, right? Is this, has this huge drop in price, is it finally over? Well, if we look in time prior to the drop in price, we see that the volume has been pretty light for MMTLP. During that massive drop in price, right, the volume was fairly heavy. You can just see the volume being heavy there. And the volume still looks pretty heavy compared to the way that it was prior to the drop in price. So, I don't know. Is it over? It's hard to say. I'm thinking maybe not, because the volumes are still heavy. If once that volume becomes light again, it'll probably be over. Okay, that's my current thought right now. I could be wrong. Who knows? You never know. Well, what about MMAT? What about metamaterial stock price itself? We see that dropped a lot in price. We don't see a large volume there. It dropped for little to no reason. What's going on there? I call that a sympathy movement. Yeah, I think metamaterials dropped in sympathy to metamaterials Torchlight preferred shares. Okay. Now, what was the reason for this panic? We all know what the reason was. The reason was that on March 31st at 5 a.m. in the morning, metamaterials made a press announcement about the Series A preferred stock, or the MMTLP, right? This is what happened, right? Basically, their stock announcement was a non-announcement. They said, basically, that they announced a formal transfer of assets to OilCo Holdings. They said that they want to ensure that the OilCo capital structure supports a spinout. They said that before, okay? They said that they need to make any necessary filings with the SEC. These are the 3 steps they need to do in order to spin out OilCo, is what they said, okay? And then they said later on that in order to complete the spin-out, they need to complete an audit of the oil and gas operations. And after all of that stuff is done, the holders of the Series A preferred shares will exchange their preferred shares pro rata for the OilCo common shares. Okay? A lot of words out there. Okay? And, but there is an interesting quote that happened after all of this stuff, because there's a lot of words and it's, you got to decipher what all that stuff means. Greg McCabe said, the required audit, legal, and compliance steps are inherently time-consuming. I am pleased with the progress thus far and look forward to seeing the spin-out completed. Okay, Greg McCabe, he's the former chairman of the board of Torchlight Energy. Okay, he's happy with what's happening, and he thinks it's reasonable. It's not unreasonable. He's got a lot of Torchlight shares. He's got a lot of MMTLP shares himself on the line. He's okay with it. So that's good to know. But what did all that stuff about, formal transfer of assets and all that stuff means? Basically, the way I look at it is they need to complete the audit of the oil and gas operations, okay? And then they need to make any necessary filings with the SEC. And at that point, they will have spun out OilCo. And then your Series A preferred shareholders, or the MMTLP shareholders, will have their shares exchanged for the OilCo common shares. It will happen automatically at that point. So those are the 3 steps. 1, 2, 3. Complete the audit of the oil and gas operations. They already started. They have an auditor in the works. It's already started. And then make the necessary filings with the SEC. And the SEC has to approve of those necessary filings, right? They can't just file willy-nilly. This is their team. They talked a little bit about their oil and gas team. It includes Clifton DuBois, Delvina Oliker, I can't pronounce that, OilCo, Kyle Bradford, and Darren Rader. They all have tons of years of experience. Clifton DuBois, his name should be kind of familiar. I believe he was in the He was in the NextBridge hydrocarbons arena, where they were looking at the stuff in the Oro Grande Basin. All these guys have tons of experience. They know what they're doing in the oil space. So, and they will likely be hired on into OilCo as a result. So the whole thing is, we got an announcement that was a non-announcement for the most part, but weren't we really expecting this? What's the deal here? The reason I say weren't we expecting this is I made a video earlier and I talked about how you sell oil lands, right? That there's 3.2 to 3.7 billion barrels of oil. That's a lot of oil. And if you look at it from the buyer's perspective, you're looking at spending, 26 to 31 billion dollars. That's a fair amount of money. And right now they only have test wells, no infrastructure, so that represents risk. And so from a buyer's perspective, you want to de-risk, right? So you want those test wells to be converted to production wells, because at that point you're spending 26 to 31 billion dollars. You want to de-risk, right? And de-risking basically means you got to do some production. Doing the production means you got to convert the test wells to production wells, right? It's going to require a bit of loans and money and all that to do that. It's also going to require selling some oil because it's a production well, right? That means you're going to get a revenue stream. That means you're going to have an oil company. If you're going to have an oil company, that almost certainly means that you have to spin out OilCo, because Metamaterials is not an oil company. So you got to spin out OilCo prior to the sale. So that's why I'm saying that's why I said we should know this, right? I discussed this in a previous video. Okay, this was pure speculation on my part. I had no knowledge at that time, and I said this is probably what you got to do anyway. Because just think rationally. What would you do? How would people want things done? Right? You're going to spend a lot of money. You're going to want to make sure that stuff is as certain as possible. You don't want to spend money on something that's uncertain. These guys aren't spending $26 billion on a lottery ticket. Right? That's just the way things are. I talked about the language that's used to describe the oil reserve, right? The fact that, proved resources are basically, for proved resources, you're going to want to have some production data, right? 3.2 billion barrels of oil, you're going to want to get to proved. You're not at proved right now. You're somewhere in the probable stage, possible to probable, right? And the reserves can only be classified as proved if you have, the ability to transport those reserves to market, and actually sell them, right? From an operational well at the time. Or Grande is not developed. It's an undeveloped property. So, and you can have proved undeveloped, but the locations should be direct offsets to wells that have indicated commercial production. What does that mean? Indicated commercial production means you got to have commercial producing wells. So I outlined a possible plan, right? You got to drill a bunch of production wells, spend some money to do that. As a result, you're pumping oil now. You're making some money. You might even want to spend some of that money to finance a pipeline, so it's cheaper to actually get the oil to market. And when you do that, you'll want to sell the property, and pay out that dividend in a possible tax-free stock swap manner, right? That's the plan. And I said, okay, even if you did all that, even if you spent all that money to make the production wells, maybe even add a pipeline or something like that, it's not going to change the price of the dividend that much. You're still talking with $100 per barrel oil, you're talking about a possible $70 dividend for proved wells. $3.2 billion of proved is nice. If the price of oil goes up to $130, you're talking about $100 per share dividend. If it's proved, it's got to be proved. That's the key. So George Peligaris wants to maximize the Series A preferred shareholders' profit, right? He wants to maximize that. So when do we expect all this stuff to happen? Because it sounds like it's going to take it sounds like a lot of work's needed. And a lot of work is needed, right? You need about 10 production wells, let's just say. And you got 4 wells done, but they're test wells. Maybe, I don't know, 2-3 months, maybe 6 months, who knows? So it could take a little bit of time. You got to drill some wells, get them producing. This is pure speculation on my part, right? I have no knowledge. I don't know. I'm just guessing here, right? But, it's a possibly speculated guess. I don't know. It's a guess based on reasonableness. And so when they said over here that this is what they need to do with the OilCo spinout, I made a tweet about it. And I said, hey, look, super busy, but I think it's expected. I think they need to convert, they want to convert their reserves to the proved category. Spinout is not unexpected, right? They listed what they need to, what needs to be done. And if you want to know when the divvy is, I don't know. I really don't know. But I'm thinking, Q2, Q3, maybe Q4. Roller Pigeons thinks it could be Q3, Q4, right? Those would be what I would consider reasonable, likely time frames, right? Given what needs to be done. So that's that was what I tweeted out about. Okay, so that's what that tweet means. It's based upon doing what you got to do. So that said, let's talk about some other stuff. So the metamaterials family feud is still going on. I would like it if everyone just got along, but hey, maybe people got to agree to like disagree, right? My take on it is that Roller Pigeons has always provided sincere knowledge and information. She's, I trust what she has to say. I think she's a good person. Okay. I hate to see people try to attack Roller Pigeons. I think that's just wrong. A lot of people are upset with Sterling stocks right now, and I get it. He's frustrated, but he's been a great resource in the past. Look at that video that he made at CES with George Palikaris. That took a lot of work. That took a lot of effort, and that was tremendous insight that he provided. Right? He told us. He got George to tell us so much new stuff about how much he cares about MMTLP, how many shareholders are. We got a lot of information out of that. Sterling's a good guy. He's likely frustrated. He's probably had a bad day or two. Come on, he's only human. Give him a break. That's my take on it. Terry Yonkers, I think he's a great guy. He's been at it every single day. Basically almost every single day. He puts out a video. He lets us know what's going on. He's a good guy. Same thing with Uncle Smokey. He's honest, sincere. He's knowledgeable. Shares his information, willingly and freely. These are all great guys. Okay, let's just try to get along. Okay, that's my take. My belief is that there's one group out there. Basically, I'm not going to say who they are. You can figure it out. But anyway, they say MMTLP is dangerous to shareholders. It's a distraction from MAT. They think people shouldn't buy MMTLP because, it was never intended. Okay. Those are, that's their take on it. Their take on it is that, hey, newbies don't know what this is and they're buying it and, they could get nothing out of it. It comes from the dark side of the force. It's evil because the guys who made sure it's tradable, that was not metamaterials. We know that was not metamaterials. It was basically guys who wanted the Series A preferred shares because they had a liability for Series A preferred shares and they could not deliver it. So they had to make it tradable so they could buy it. Okay. That was the reason they made it tradable. And it's true. It's not a great thing. I mean, they naked shorted the crap out of it. But, hey, look, my take on it is that the dividend, the MMTLP dividend, could be a catalyst for an MMAT moonshot, right? And that short hedge funds have a ton of money, and they will continue to suppress MMAT as long as they can. But once that dividend comes in, it's going to blow them apart. It's going to totally obliterate them. So I'm pro MMTLP dividend. I hope it's a big dividend, and I have a feeling it's going to have a good impact. That's my take. Okay. But hey, if you think it's dangerous, go for it. I mean, it's dangerous. I mean, everyone choose their own level of risk. Okay. But that's my take on it. And again, this is my opinion only. I have no knowledge in this. I'm just a YouTuber. Okay. This is my opinion only. No knowledge. Okay. Make up your own mind. Now, the other thing that you should be aware of is that short hedge funds are probably watching everything that's going on because they got a lot. They got a lot on the line right now. They probably shorted over 10 times the amount of stock there is. Their liabilities are huge. They want to find out everything that's going on. Okay, So they're likely watching this channel, even though it's a tiny channel. Okay. But they're probably watching, some much higher subscriber channels. And I just want to make a statement to people who are new to the entire stock market and all that. So beware of people who've outlined possible strategies involving options on how to make money on this stuff. Because, they're expecting the stock price to go up for some reason, let's just say, right? And they say, hey, look, if you know the stock price is going to go up because of XYZ, you can buy some options, out-of-the-money options, out-of-the-money calls, and you can make a ton of money in that sense. Because once those out-of-the-money calls get triggered, those worthless call options, they become worth a hell of a lot of money, right? So, yeah, it's a possible way to make money. But remember I said the stock can go in more than just two directions? It could do this. They could, if the stock is being manipulated and you bought call options, chances are, if the other side knows where the majority of those call options are, right, it's called the open interest, they can actually manipulate the stock so that it's just under your strike price for a long time. Wait for those call options to expire and then let the price go up. Or if they had even more money, they could keep it, just below your strike price and then pummel the stock just prior to when your calls would, expire. In either case, you lose. So options are tricky. They're even trickier if the other side knows that, hey, this is a strategy that you might be employing because you think they're employing that strategy. And I don't know. I'm just saying, just be careful. Okay. People are watching, likely, channels that are recommending interesting ways to make money. Okay. Just be aware. I'm not a financial advisor. This is not financial advice. Do what you want. It's true. I'm not a financial advisor. Okay. Now, let's talk a little bit about the price of oil. Now, oil, this is WTI, West Texas Intermediate. It's down a bit right now. $98, dropped down below $100 a barrel. Okay. Over time, if you look at it, it's been headed upwards since the start of 2022. I just drew a line over here. It's a meme line, let's say. It's the oil price trajectory that was prior to the Ukraine war and prior to the invasion, let's just say. Okay. So the Ukraine war happened around start of March or so. Price of oil skyrocketed up there. But if you look at where the price of oil is today, it's somewhere around that meme line. So I'm just saying that the Ukraine war, that's fully discounted in the price of oil right now. The price of oil is not. It's thinking that there's no war going on in the Ukraine as far as it's concerned. The price of oil doesn't. It's the Ukraine war is not what's driving the price of oil at this point in time. And if we look at what's going on in the news, the Ukrainians struck back against Russians. They blew up an oil depot. Well, there's some more oil burning right now. Our president has announced, he's releasing the Strategic Petroleum Reserve, the SPR. Jeez. He says he knows that inflation and gasoline prices are killing, the Democrats in polls, and he wants to show that he's doing something about it. But he knows what he does. He knows that releasing the Strategic Petroleum Reserve really won't make a difference, right? He's basically anti-oil and gas, but that's okay. That's basically what's keeping the price of oil and gas up. So yeah. So I got no problem with that. He's keeping the price of oil and gas up, so that's going to make us money. Okay. That said, here's an oil and gas company called Camber Energy that I covered last week. I was thinking about if we, I think it's a good idea to keep an eye on what they're doing. Their stock price is around 83. They could be set to explode. This is where their stock price was just, I don't know, just since last September or so. Okay, and if you look, They were as high as $4.50. And if it just recovers back to there, that's a pretty good gain right then and there. And it's probably going to recover way past that point. If you want to know why I think that, check my previous video on Camber Energy. Okay. That said, let's move on to Gamestop. They released a Form 8K this week. This is the biggest news that happened last week. I will repeat, this is the biggest news that happened last week, is this Form 8K that got released by GameStop. Why do I say that? Because in their Form 8K, they said, essentially, I'm just highlighting the part in yellow because that's the part that really matters. On March 31st, 2022, that's when they released the Form 8K, GameStop Corp announced its plan to request stockholder approval, blah, 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 for an increase in the number of authorized shares of Class A common stock from 300 million to 1 billion, okay, in order to implement a stock split of the company's Class A common stock in the form of a stock dividend and provide flexibility for future corporate needs. What does that mean? Why is that the biggest news? They're implementing a stock split of the company's Class A common stock in the form of a stock dividend. If you don't know stocks, you might be wondering what's going on here. When you do a regular stock split, right, you might have, say, a 2-for-1 stock split. If you had a bunch of shares, you got twice as many shares. But the price of the shares immediately drops to 1/2. So no change, except you got twice as many shares, price is 1/2, okay? And the price of the stock usually goes up following a stock split. That's a regular stock split. There's no taxes involved. It's not a taxable event. You just got twice as many shares at half the price, so it's the same dollar value, right? If you get a dividend, okay, basically that means that you had some shares, and then you get some shares and some money, and the money comes from the company, right? So if you look at a stock dividend, you had some shares at first, and now you got some shares with some additional shares that came from the company, right? That's what a stock dividend would be. Instead of a cash dividend, you get a stock dividend, right? So previously, you got a dividend, you had some shares, suddenly you still have the shares, but you have some additional money that is given to you by the company, okay? So, but a stock dividend means that you had some shares, and now you have some more shares. But those more shares didn't come from a stock. I mean, they're not automatically generated via split. They're given to you by the company in the form of a stock dividend. Why does this matter? Because there's a ton of shorts out there. Okay. Why does this matter? Because there's a ton of shorts. Okay. If it's estimated that there might be somewhere in the range of 10. GameStop has about 70 million shares, and it's estimated that there could be anything close to over 1 billion shares short of GameStop. That means there are more short shares than there are actual shares that were issued. So if the company now is issuing a dividend in the form of additional shares that it created out of the blue, that means that if you're short, you're now liable to provide those extra shares. Where are you going to get those shares from? Okay. You could try to make it short more shares, but then you'd have more liability, and chances are you'd trigger a margin call because now you've got more liability. You could try to buy those shares on the open market, in which case the price of the stock will go up dramatically because no one's selling, because they know that the more shares they have, they'll get more shares in the future. This is a genius move on the part of Ryan Cohen and GameStop. This is incredible genius. A stock dividend. Okay. Now, there's an additional thing that happens with dividends. Now, normally with a cash dividend, a lot of people hold on to their stock during a cash dividend because, then at that point it becomes termed what's called a qualified dividend, and you get taxed at a lower long-term capital gains rate, right? So if you get a dividend and you've held onto that stock for a long period of time, it becomes a qualified dividend and you get taxed at the long-term capital gains rate. That's a good thing, right? That's a lower tax rate than normal. So you're encouraged to hold on to your stock in the form of a dividend. So, and that period of time is usually 30 to 60 days. So it pays to hold on to that stock. What happens with the stock dividend? Okay. You're now encouraged to hold on to the stock, and you have additional shares that came in because, you had it, you had a certain number of shares. You now have additional shares, that came from the company. And and if you didn't have original shares and you had synthetic shares, those shares came from the shorts because they had to buy it on the open market or they had to close out their short position. And you're now encouraged to hold on to those shares for a long period of time because you want qualified dividends. So I don't know what the tax implications are, but I do know that I wouldn't want to pay a lot more in taxes. So I might want to hold on to those shares just for, as long as possible to avoid extra taxation. Right? So implementing the stock split of the company's Class A common share, implementing a stock split of the company's Class A common stock in the form of a stock dividend. That's a genius move by Ryan Cohen. Genius. With that, I have to say TikTok, right? Time's running out for shorts. They got to figure out what they got to do because they now have a liability and they have to get rid of that. They have to so basically they have to get rid of their short position. And the only way to do that is to buy it. So we saw the price of Gamestop drop after this announcement. In the after hours, it immediately went up from $160 something to $190 to $200 per share. Came back down came back down the following day in trading because the shorts basically couldn't afford for the price to go up that high at that time. Because if the price went up that high, chances are that would trigger a gamma squeeze. A gamma squeeze basically means that options holders would now be in the money. Out of the money options would now suddenly become in the money. So that means that people might exercise the options. That means those options, the call writers would have to go out and buy those shares in the open market, to provide to whoever might, take those shares. The end result is that the price would have gone up dramatically if it was allowed to stay over $200 a share at that time. I believe that's a calculation that was done by the shorts, and they figured better to risk losing more money in the future than immediately go bankrupt now. And that's probably why they shorted continually GameStop. Now they have a bigger liability, but time's running out because of this stock split of the company's Class A common stock in the form of a stock dividend. Ryan Cohen is a genius. There is no escape for the short hedge funds in this case. So that's why I say this is the biggest news that happened last week. How this will affect other stocks, I have no idea. But a lot of people who've shorted a lot of the companies who are short GameStop are also short AMC. They're also short metamaterials, and they're also short Carousel Capital. They're also short Camber Energy. Examples of companies like that are Carousel Capital, right? Carousel Capital is short Camber Energy. They're short metamaterials, and they're a smaller firm. And chances are those smaller firms would want to close out any short they have in GameStop, because otherwise they will be sacrificed and allowed to go bankrupt. So they got to save themselves first. Genius move by Ryan Cohen. With that, I'd just like to say that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Goodbye.